What's up, good people? How you doing? The question is, will the Fed raise, pause, or pivot? That's what we'll find out emphatically on tomorrow. He's having a meeting today and tomorrow, and Jerome Powell will let us know what's going on. One thing we do know for sure, the banking industry wants him to pause. A lot of industries want him to pause, but especially the banking industry. For those of you that are new to the page, hit the like, subscribe, and notification bell. If you've been rolling with me for a while, hit the like button. Keep these likes up. It helps to keep me alive. Listen, there's a lot going on, as we could see here. Stocks sink as bank shares plunge. Fed meeting gets underway. Stock market news today. Okay. And so, of course, you've heard the term sell in May and go away. That may be true this year. There's a lot that is going on. We know that Jamie Diamond Hands said that everything is fine now, good people. It's all good. You can go home. Earlier, when things was happening and these banks were collapsing, he was the one that said, it's not over.
Jamie Dimon saying maybe not. Meantime, he also says, quote, the failures of SVB and Credit Suisse have significantly changed the market's expectations. The market's odds of a recession have increased. And while this is nothing like 2008, it is not clear when the current crisis will end. He uses the word crisis throughout this letter.
It wasn't over until he got involved. Now that he's involved and he bought it, he goes, Big Papa got it. They call me Jamie Diamond Hands, and they don't call me that for nothing. I got it. It's all good. Fact of the matter is, it's not all good. It's a systemic problem. Things are slowing down, including jobs are slowing down. Now, I want you guys to see everything that's going on, not to be afraid, but to just know where we are in spite of the talking heads. Look at this. U.S. job openings dropped to their lowest level in nearly 2 years in March. Look at that. And layoffs rose sharply. So we have that, right? So you say, hey, what about the housing? Well, it starts with the commercial real estate. Commercial real estate is in serious trouble. It has already parked and it's going to start to fall because of what's happening with the banking debacle. Follow? It's all a house of cards. And it's happening right in front of us. Will the Fed raise, pause, or pivot? Right? I will tell you that we don't know. If I had to take a guess, I would say that they really want to go another 25 basis points. That's what I'm guessing. Okay. Now, he may pivot because of pressure. Think about what's happening with JPMorgan, with Diamond Hands, and the government. They literally changed the rules so this big bank can buy this small bank. JPMorgan gets the deal, and it helps the government out, right? And then we know about the debt ceiling, right? We know that we have the first is Janet Yellen has moved the date up. And now they have to make that decision. So politics play into this. They don't want this to happen. And there's an election year coming next year, right? So Jamie Dimon, JPMorgan, the CEO of JPMorgan, cuts a deal with the government to buy this failing bank, to stop a systemic problem, to stop a run, right? But just remember, they got 84 branches, right? JPMorgan did, of First Republic. Look at that. It has been a wide range for First Republic, okay? A wild ride, should I say, which teetered on the brink of failure for nearly 2 months. The regional leader last week revealed that the deposit outflows, meaning people were pulling their money out, was $70 billion in the first quarter. So everybody was running for their money. Now it's going to the bigger banks. In 2008, we actually had the reversal. People were pulling out of big banks. Sorry for the distraction. But I'm in pain. Good people, pray for your boy. I still got this sciatic nerve thing that's coming on me. But let's get through this, all right? But I just want you guys to know that I would not be trading. And I'm just going to tell you guys, I would not be trading during the FOMC meeting. It is the most dangerous time to be trading. If you ask me, Larry, what play are you in? I'm going to tell you no play, right? Because it's just too dangerous. And I'm one of the ones that will tell you sometimes being a good investor is not trading or investing at all at this time. Now, anything I say is not a suggestion for you to buy, hold, or sell. You may see a play and you may be right. You may see a play that you can make money on, whether you're doing a call or a put, whether you're buying thinking something will go up or thinking something will fall. Then you do your own due diligence and you do what's best for you. Me personally, I'm out. I'm chilling. I'm sitting back and I'm watching. Okay, I'm eating popcorn, right? And so here's let's look at this, good people, right? I got VOO and VTI, right? The S&P 500 and overall stock market. And let's look at where we are in this cycle. Let's look at the last year. We've been on a steady decline regardless of what we see on these bounces. A lot of analysts say that October of last year were the lows, right? And they're saying that October was the lows, as you could see, of this cycle. And that's what some analysts see. And myself, I don't see that because we don't know what the future holds. Now, I want you to listen to this gentleman. He's a chief investment strategist from BMO.
We're publishing analysts, and we've had a 4,300 target and a 220 earnings number since November of last year. That's our target. That's our base case. Our bull case is 4,800 and 230. So, according to our work, the bottoms up number bottomed up for the market 2 weeks ago around 221 in terms of forecasts. As Jim said, the loss for this quarter has been cut in half. Earnings have come ahead 370 basis points higher than most people thought. According to the way that we look at things in our published research, which has been out there now in terms of the earnings revision cycle, for the last 2 months, we saw earnings revisions on a diffusion index when you compare FY2, I'm getting kind of geeky here, FY2 versus FY1, bottom out 6 weeks ago. That tells me, from my experience, that analysts and companies have been too negative.
The problem I have is his bull case is 48 and his bear case is 36. That's such a wide range. So what does that do for those of us that have a lot of cash that we want to put in? Most investors, especially younger investors, have cash waiting on the sideline. A lot of them have went to crypto. And the ones that are 80% of the retail investors that have their money in the stock market right now are, over 58, 60. Those are the ones that have the money in, retirement, long-term investing. That's the money that's still left in the stock market. The younger people have just tapped out because it is so hard to see where this market is headed. So I'm asking you guys, what are your plans? All right. I plan on, look at this. Banks are tanking, right? Look at that. They're all down, just like the headline said. Look at that. JPMorgan, Goldman, Morgan, Bank of America, Wells Fargo, they are all down. So Jamie Dimon Hands is saying, hey, it's all good now. We good. I took care of it. Big Papa's got it. And it's not good. And people are smarter than they used to be. So I will just tell you on tomorrow, I will be going. I'm going to try to go live if this equipment agrees with me tomorrow and works for me. I will be trying to go live during the meeting. And I believe it's in the afternoon. I believe it's 2 o'clock Eastern time, but 1 o'clock our time. But please do check. OK. And so we will see what's going on. But the banking problem is a major problem that I just wanted to say, guys, it's not over. They cut a deal with the government, meaning JPMorgan, to buy the bank. And now money outflows from the small banks are going to the big banks. And today the big banks are tanking, right? And so they want the Fed to stop because as the Fed goes up with interest rates, it hurts the banking industry now that they've been exposed, it's been breached. So if they have loans that are fixed here and the Fed keeps raising, right, then the banks, they're taking a bath, right? And so now what do we do? So the government did not want to run on the banks. We would just, the market would just tank. The question is, will 25 more basis points tank the market? That's the big question. We don't know, right? I believe that the market is telling you that it doesn't like it. I believe that the market today is pricing in another 25 basis points, even though it could go lower. All right. Now, the Fed is not going to do, I don't think he's going to do something crazy like go up 50. If he goes up 50 basis points, the market will tank and I will be buying. While everybody else is running, I will be buying heavy. And you say, Larry, what will you be buying? I will be buying everything. I will be buying everything. And especially, starting off with 80% blue chip companies. That's where I'm looking to get in. You let me know what you're going to get into. And then some small caps. We'll discuss that later. All right, good people. Hey, you guys know about Moo. You guys know that the second link below, 20 free stock now. They went up from 15 to 20 free stock now. And you guys also know that this is brought to you by Stock Up You. Come and learn and earn. Come and learn about what's going on with this market so you can make more money. All right. Join us there. We will see you tomorrow. Live, love, laugh, and learn.